Biz Beat by SVA.
Welcome back, everyone, to the Biz Beat by SVA, where we focus on what business owners need to know about taxes, regulation, and business strategy. I am Lee Schwartz, Director of Business Development and Sales here at SVA Certified Public Accountants, and joined again, as always, by Eric Trost, not just our tax principal, but also our firm's president. Eric, you ready? We got a lot to talk about today. You ready to go?
I am. I've done a lot of homework on this, so I am ready to go.
Some of this stuff, it's been hard to avoid. One of the topics we've been talking about since we started the podcast is, of course, tariffs. So, every time we talk about tariffs, it sounds like we think we're going to get more answers and fewer questions. And it feels like even though we keep moving forward, there's always more questions. So why don't you bring our listeners up to speed on what's changed in the last couple of weeks, and then we can talk a little bit about how clients are dealing with this information and what they should be doing moving forward. So bring our listeners up to speed on what's happened.
Sure. So we've been waiting on this for a while, but how Trump instituted these tariffs. So this is a little background. How Trump instituted these tariffs was not necessarily through the normal process where you get congressional approval and you have negotiation within Congress to get to a final tariff. Trump used other powers to create tariffs, powers that he believed allowed him to work around Congress to put tariffs out there. So he's been putting these tariffs out under those powers. The powers that he's using don't necessarily say within the powers that tariffs are covered. So Trump thought they were, others thought they weren't. So it went to court. Do these powers actually cover tariffs? And it went all the way to the Supreme Court. The Supreme Court finally gave their ruling and said, no, these powers do not allow these tariffs to be in place. So what the Supreme Court basically said is that these tariffs that were imposed by Trump, at least certain tariffs, were not legal tariffs. And generally when that happens, essentially that means those tariffs shouldn't have been in place. And any tariffs that were paid are now potentially refundable.
And however, and based on the way you said that, I'm guessing it's not quite that cut and dry.
Yeah, so probably not. Question on the refunds was not addressed by the Supreme Court. So even this is a quote from Trump, something to the effect of, so what are people going to do now for getting their refunds? And Trump said, hey, that wasn't addressed in the Supreme Court decision. So it's probably going to be litigated for the next 12 to 18 months. And so I think already they're posturing that perhaps the past tariffs are still going to be legal, or they're going to try to, do some kind of exception for those. Now, in the meantime, companies are filing for refunds. So you're getting a lot of companies going through some kind of procedure to say, hey, we've, paid these tariffs. They're now illegal. Give us our money back. And that's probably the start. Whether it actually all happens or not, going to have to file a claim for refund likely to get this. So the start is lodging that refund claim. How this might shake out then is, if you're a company that's been paying those tariffs and perhaps not passing them along to your other buyers of your product, then maybe you have to make that claim for tariff and the refund. But it's possible your product, let's say you bought it and then we're selling it to another business, and you told that other business, hey, here's the product cost and here's what the tariff cost is, and pass that along. Now, your customer that you sold it to could be calling you and saying, hey, what are you doing to get your tariff back? Which should be our tariff. What are you doing to get my money back is basically what they might be asking. So those conversations could start happening. I think what you want to do is look into what you've been paying in tariffs and start talking about with your attorney or accountant on how you might file claims for refund to try to get some of those back. Again, it may not happen. This is not money that, I would recommend you go out and spend on the come that, hey, it's going to come back. I don't know what's going to happen with it. Other than you will be joining a number of companies that have already announced, hey, we're suing the government to get our tariffs back.
Right. And it gets even more complicated than that, right? Because you could be 3, 4 levels down in the supply chain, and it's almost untraceable who, at that point, maybe who's even paying the tariffs.
Yeah. Well, I think the who paid the tariff will be, the company that submitted the tariff, and the importer of record is the one that's supposed to pay it. But it's a matter of, yes, did they pass it along to the next company who passed it along to the next company?
Right.
So, for example, if you were using it in your pricing and you said, "Hey, this is part of our cost structure now, and we have to pass this along to you," and that gets passed along so many times, yeah, that's where the chain can get really complicated as far as, well, who should get this money back? It's it might be the importer of record just says, "I'm going to get it back and keep it," but if you were passing it along to your customers and they call you for it, that's going to be a hard position to justify.
Right. So this is another example of where, there still are really no more answers to some of the questions that we've been talking about for months now. And that doesn't even, we haven't really even touched on, all right, where does Trump go from here? He's
Right.
already stated like they have other avenues for implementing other sorts of tariffs. And we don't even know what those are going to be yet, right?
Yeah, that's right. I think the question that was answered, at least in the short term, is that the Trump's tariffs as he was using them are stopping. So the questions that open up are, how do we get the refunds? Are they going to give refunds for this, or is that somehow going to be grandfathered in that these tariffs were okay at least for that time? So I think those are the questions that are open. And then what's Trump's next move? Keeping in mind, big picture is I believe Trump thinks that the United States market is an asset that other countries were taking advantage of without proper compensation to the United States for that. So that the fact that the United States keeps this market has value for companies that can sell in there. And the tariffs were meant to capture some of that value. And now they're not capturing it because the way Trump did it was made illegal. So, how else can Trump enforce some kind of exchange where getting access to the United States market, the United States consumer, gets appropriate value to the United States?
Right. So again, just so much more to come. We'll continue covering this, but I think for now, it's just a matter of. It sounds like, Eric, your recommendation. If you're in that supply chain, if you feel like your dollars have been going towards paying some of these tariffs, whether it's directly or through your suppliers, it's time to start thinking about the long term of what that looks like.
Yeah, I think for sure it's time to start looking at what your tariff exposure is and what it might look like to apply for the refund and get it back. Not necessarily saying you have to do it, but I think you want to start to look at, what would I do to get this refund back? What dollars are out there? What are my customers going to ask me if I passed it on to them? So I would be prepared to talk to them about how I'm trying or not trying to get it back, and here's why.
Right. Okay. Well, let's move on to something a little bit more technical. We also have been talking a lot about some of the changes, at least the changes in 2025 from the One Big Beautiful Bill Act. The IRS released a new form that consolidates some of this reporting. Do you want to talk a little bit about what they just released and what people should be on the lookout for?
Yeah. Well, for starters, if you're not sitting down, I want you to sit down for this because this is big news. All right.
I, I'm sitting down. I'm ready to
Good.
go.
Good. The IRS released a form. And so,
Wait,
uh,
just let that sit for a minute.
right.
Let's just soak
Yeah,
that in. You can't just move straight into the content here, Eric. Hold on.
that's true. That's
Wow.
true.
Yeah. Okay. All right. Sorry, go ahead.
So, yes, the IRS released a form and they just actually released this last week. They had some drafts of it out, but they just released it. And in this form is all these new deductions that are available that are what they call above the line deductions. Okay. So, real quick, what do I mean by that? There's above the line deductions and below the line deductions. Essentially, above the line deductions mean you don't have to take itemized deductions to take advantage of these deductions. So, you can use, when you're computing your taxable income, you subtract actually either your itemized deductions or your standard deduction. And if your standard deduction is higher, you just take that as a deduction. You don't care about your itemized deductions. Well, that's good and it's bad. It makes it easy because, hey, I'm just using a standard deduction. It's defined. I know what that dollar amount is. I don't have to do any record keeping. That's easy. Um, but the negative to that is, if your itemized deductions were higher, you're potentially missing out on some deductions, but perhaps your itemized deductions never were higher. And so your standard was a better way to go, standard deduction. These deductions you get without going through that math. These deductions you get, and you can also get the standard deductions. So you take these and the standard, or these and the itemized deductions. So above the line means you get to calculate these deductions against your income before looking at standard deductions and itemized deductions. So it's a really good place to have a deduction. Everything that's on here is essentially the things that Trump was talking about in the new tax law. So there's the no tax on Social Security. There's no tax on tips and overtime on here. There's no tax on auto loan insurance or auto loan interest expense. So there's a number of things on this form. And by the way, when I say no tax on Social Security, I know that was Trump's original saying for it, but it's really an additional deduction for seniors. That's what it is. So I think you got to translate no tax on Social Security to really just mean, hey, I'm getting a deduction for being a senior. I still have to pay tax on my Social Security, but I get a special deduction for being a senior. So all those things are on this form, and it's now ready. So if you previously were trying to file your tax returns and needed this form, there wasn't a place to put them on. Well, now this form is ready. This should allow you to file your tax return and claim these deductions.
Eric, what I mean, it's here we are, beginning of March. If somebody was really on the game and already completed their tax return, what do they do now?
Well, what they should have done is been advised that, hey, wait a minute, this form is not yet ready and it's just in draft form. So you can't file your tax return yet.
Ah,
If they already filed their tax return, there's a way to go about that, filing what's called a superseded return, where you just refile your tax return as what's called superseded and override the tax return that's out there. It's going to be a little bit of a delayed process, but there's a way to refile your tax return. If you wanted to take these into account but forgot that this stuff was out there, you can go back and redo your tax return by April 15th and still take advantage of these deductions.
okay. And talk to us just a little bit about how straightforward these are. Are these sort of are these a little dumbed down? Anybody can do this, or is this something you want to rely on your CPA for?
Yeah, it's I don't know that you wouldn't want to fill out a form by hand by yourself anymore. That's true for most forms. They make them so complicated now, and this one is just like that. It's a lot of, write this number down, look at this number. Is it higher or lower than that number and put it here? Divide that number by two. All that kind of stuff is on the form. So it tries to walk you through mechanically what to do, but very tough to read and follow. So ideally, at the minimum, you're using a software to do this. You're using something that, there's plenty of softwares out there like TurboTax or TaxSlayer. You're using something like that that'll have this built in, or you're using a CPA or an outside service that is helping get through this because they know how to navigate this stuff very quickly. So difficult to do by yourself on your own, a little easier with the software, or you do what, frankly, our profession is in the business of doing, is you just go to one of those professionals and have them do it.
Gotcha. Okay. So that's been I mean, we've been talking about those things for a long time. Now a form is actually in hand.
Yes.
It's kind of exciting to see that all the way through, huh?
Yeah, right. It started out as a tweet, and now we have a form.
A truth, Eric.
A truth. That's
Right.
true.
Yeah. All right, great. Let's move on to the inbox. Please send us your questions at bizbeat@sva.com, or you can submit them on our website at sva.com/bizbeat. So, Eric, this week's question is, I just got a notice from my plan administrator that I have to file a Form 5500 for my solo 401k. I've never had to do that before. What is this all about?
Yeah. And so what they're getting there is, and I saw this on the question. I actually had a client ask this same thing just a couple weeks ago as well. What they're getting there is for a solo retirement plan. So for those of you that are self-employed that maybe have a solo K or a profit sharing plan for yourself and are putting money away in a retirement plan, those retirement plans normally have to file a form with the IRS called a 5500. unless they're small, and small means under $250,000 in assets, then they don't have to file. So if they're a one-person plan and they're small, there's no filing that's even required. But when you cross that $250,000 mark in assets in the plan, then you have to start filing this Form 5500. It's a big deal because the penalties for missing a 5500 are quite significant. It's a couple $100 a day. So the penalties add up real quick. And if you don't know that's happening, you're in a bad spot. There are programs to get compliant if you should have been filing and you didn't. But you don't want to miss these. So if you've got a solo retirement plan, you want to figure out, is my plan administrator filing this Form 5500? Do I need to file? Are they filing it? If not, should I be filing it? This is something you should be checking every year then.
Okay. And who does typically file that, do you find?
Yeah. Usually the administrator will, or at least let you know, like they did here. Not every CPA firm does. Like, we don't do them. So it's a different kind of form, different kind of filing. It's not a usual tax form. So we, SVA, don't do them. We'll tell people about them and how to get them done, and can help people guide to file on their own. But it's it's usually the plan administrator that would do it, or they would instruct you to do it.
Okay. At $200 a day, you don't want to wait. You don't want to mess around with that. Eric, when's the deadline for that?
Yeah, deadline's July 31st for a plan year end, 12/31. So that would be typical. You have till July 31st, or you can extend it till November.
Okay.
So yeah, it's usually not people that can't get it done because it doesn't take a lot of time to do it. It's a matter of, are they aware that it needs to be done?
Right. Okay. And there's nobody calling you at the end of every day saying, "Hey, $200 more." So the last thing you want is
Right.
to find out a couple months later. So yeah, that's
Yeah,
one
a couple months, or in
definitely
this
put on your
case,
to-do list.
a couple years. Once it gets to a couple years, yeah, right.
Yikes.
Yeah, then you want to do some kind of voluntary compliance and get it done as quick as possible. So, coming out of here, if you're hearing this and you have a solo plan, you want to make sure that that 5500 is being taken care of by yourself, your CPA, or the plan administrator.
Great. All right. Thank you for that information. Good mailbag question. Thanks, listener, for sending it in. And that wraps up this week's episode of The Biz Beat by SVA. We covered an update on tariffs. We talked a little bit about the new IRS form, which everybody was excited about, I think, and then covered a little bit about what you need to know about filing that Form 5500 for a solo 401k. If you found this information helpful, please subscribe to our podcast on Apple Podcasts, on Spotify, or on YouTube, and share it with another business owner that you think might find it helpful. And as always, I'm going to give my typical caveat, which is the information we share here is not intended to be specific in nature. So don't go off and make decisions without talking to your advisor. And if you don't have a good advisor to talk to, please contact me and we can talk about how to make you a client of SVA's. That's going to do it for this week of The Biz Beat by SVA. We will see you all next week. Thanks for listening.
It's the Biz Beat by SVA, breaking down the news of the day. From tax tips to business trends, smart insights from trusted friends.